Hello and welcome everyone to the week ahead commodity report. So first of all, what do you need to know in the markets for this week? Well, we have seen gold prices now breaking out to 7-year highs, and I hope many of you have caught this move. So this was going back to exactly what we suggested last week, breaking out to 7-year peak on gold, which I'm so pleased that many of you have been able to capitalize on this move. As you know, last week over 65% of technical traders have been selling short gold, trying to catch the top around 1610, around 1650. And what have we seen over the course of the weekend? An absolute capitulation to the upside. Gold soaring over 2.8% on Monday. And of course, hedge funds and money managers, they have built into their net long positions again in the latest week. Many retail traders have been flushed out the market, which is evidenced by the fact that the amount of sell shorts has reduced dramatically. And of course, we've been able to benefit on the breakouts of gold here in the latest week, banking over 2,000 points. So again, well done to everybody who caught the trade by a lot of the conversations that we've been having at the Gold and Silver Club. And those of you that have been tracking our week ahead reports, well done. If you have also capitalized on this move, it's been phenomenal with the breakout here to 7-year highs. So we have seen everything really play out that we discussed last week on the higher time frames, the weekly chart, the monthly chart, the breakout has all now been fulfilled. However, you want to take a step back and review what gold is doing as we get towards the final week of February and what we can anticipate now as we go into March, April and May. So with that, let me move over to the charts and I'll talk you through exactly what we're looking at as we go into this week. Firstly, if we have a look at gold, right now it's trading at 1,671 US dollars per ounce. So if you consider last week, this is where you can go back and watch it on the week ahead report where we had discussed again that typically what you will tend to see is that breakout over Wednesday, Thursday and Friday. So you can see that on the Friday, Thursday, the Wednesday, giving further opportunities to build into your gold positions. We already had 4 positions which we'd built in the previous week, which we were able to let all of those run, which worked out extremely well. And again, I mentioned this previously that we've seen a lot of these breakouts happen later on in the week and over the weekends, where often you will get this gap higher on the open. So you get the Wednesday, Thursday, Friday breakout, the gap higher on the open, and watch out for the potential of a capitulation as well. So this is very similar to what we've seen previously with these large gaps higher, especially at the end of the month, end of December into January. And we've also seen these as well at the end of January too, and then into February, of course, in the final week of February as well. What I would keep a very close eye on now for this week, so that has all happened, right? Gold has delivered over a 5% return over this month. Many of you have done extremely well on this market on the long side here throughout December, throughout January, throughout February. Now is where you need to pay attention, because between now and into March, April and May, from a seasonal point of view, it is not a strong time of year for gold, okay? So just be very aware of that. You know that we've been very much on the bullish side throughout December, January and February, building into our positions. Just be mindful now that as we go into March, April and May, normally this is a weaker time of year for the precious metals. What you're starting to see now is a lot of traders are FOMOing in. A lot of traders who've been sitting on the sidelines, not really touching gold, shorting, they've been stopped out. Now they're looking at potentially revenge trading to go long, or FOMOing in, as you can imagine out there. There's a lot of FOMO in the markets. They're going to start looking at gold at these prices. And often, as we go into March, April and May, this is where gold can correct quite significantly. You can go back previous years, have a look at that. And where we're at right now, we're into the final week of February. So far, we've had a capitulation top, which we've been anticipating, waiting for. We've been on the long side, benefited by over 2,000 points. And what we're seeing right now is, so far, we've seen a breakout to 1,689 US dollars per ounce. Gold right now is sitting at 1671. So this is the price action that we're seeing on the lower time frames at the moment. You can see we're starting to get a bit of a pullback. In fact, we're just getting to about 1670 at the moment. You can even see some of the lower time frames here where gold is pulling back and rolling over. So essentially, this is very likely to trap technical traders in 2 ways. So it will trap them from the sense that they were shorting, and I hope you weren't shorting ahead of the weekend, because that was quite a significant gap in the opposite direction. But essentially, Many traders who've been shorting last week and the previous week, they were looking for a double top around 1610, which didn't come to fruition, and as such we've seen a continued breakout. Then other traders, of course, on Friday were also looking to sell short around 1650, so they've also been taken out of their positions. And now what you're tending to see at the moment is, after a lot of sellers who've been trying multiple times to sell in this market, they get exhausted, they run out of stamina of selling, and then they actually look at the potential to go long. They watch all the coronavirus headline news items, and therefore they start getting long, just as everybody who's FOMOing in the top of the move could potentially then go through a correction. So have that in mind, because usually as we go into March, April and May, we do see corrective moves. You can see even today, new traders who've got into a sell short earlier on today have already been stopped out of their sell short. You've seen this pop higher, but now we're rolling over. Look, we're now at 1669. Okay, so I would actually watch out. So we've actually got a counter flow move on. After banking over 2,000 points, we're reversing position now on gold. We are selling short. What's really important though is the timing of our sell. We've not been selling short at these levels at the beginning of February. We've been continuing to build into our long positions the whole run up until we've eventually capitulated here. Now we're reversing position. We're looking for a bit of pressure to the downside. Okay, so this is our expectation, that you've also got a gap here and we could start to roll over. You can see back below 1670, put a bit of pressure to the downside. We're definitely going to see a lot of FOMO traders potentially start getting trapped right at the highs here. So you could start to see some pressure to the downside for gold here. So that's just something to be aware of with gold at the moment. So again, typically from a seasonal cycle point of view, we do start to see pressure to the downside for gold, especially in an election year that we're in at the moment, from March, April and May. So I want you to be aware of that. Now let's just move over to the other market that we're very interested in at the moment as well, which is crude oil. In fact, we like these prices with crude. We broke back down, back towards some major support this morning around $50.50 per barrel. We're already seeing oil catch a bit of a bid here. I am looking for essentially oil to catch a bid over the course of this week. We've also gapped lower off the open. You can see where earlier on today we've also had a tap back down towards $50.50 per barrel. We're now approximately about $1 off the lows today. We're starting to look at building additional positions here on oil. So again, I would look out for this buying evidence right at the lower end of these channels. And you can see here already on the lower time frames, we're getting a bit of a capitulation here on oil. We're definitely seeing some support come back in. Of course, you've got the OPEC meeting now as we move into March, and on the higher time frames as well, we have been building a base. So I would be keeping a very close eye on oil at these levels. Ultimately, I'm looking to see whether we can get a bit of a bull flag here over the course of this week and make a move and run up back towards the swing highs. Okay, that's what I'm looking at here for oil over the course of this week. That's what I would have on the radar. We've already seen quite a lot of pressure already over the course of Monday's session. It's been over a 2% drop to the downside, but you're already seeing oil catch a bid here, $1 off the lows right now. And again, a lot of the coronavirus headline news items, we've benefited of this with the breakouts that we've seen on gold throughout this whole month and also January as well. In fact, look at gold now, 1663. It's just broken down. So just whilst I've been actually discussing it now, our sell short, it's moving nicely into profit. Great timing to be going through this. So I hope this benefits many of you, that you just need to be aware of this, savvy to this. Again, this comes down to having a research-driven approach in the market, where you're not just looking at technical analysis, you're also looking at a number of other key components in the market. You're looking at fundamentals, geopolitical news, sentiment in the market, what the hedge funds and money managers are doing versus the retail traders. As I mentioned, we saw last week over 65% of retail traders were trying to catch the top in gold. They were shorting, whereas hedge funds and money managers were building into their long position. We've continued to see this over the last couple of weeks, and as you can see in the latest week, many retail traders have been flushed out of their sell short positions, and now of course is the time where we can start to see that correction as many traders are FOMOing in. You also want to be very aware of cycles in the market. This is an election year, and also seasonality, and of course you want access to accurate data and market intelligence. This will all give you an edge in the market. So if you have been feeling the pain over the last few days here, particularly if you've been on the wrong side of these moves with gold, well, there is an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, trading research and market insights, access to our private Members Academy website, and support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.